everyone. My name is Wong Kiong, and I'm going to present my research paper, Conventional and Islamic Stock Market Among Asian 5 and OECD Countries, a review and insight. As introduction, as the globalization, liberalization, integration took place, it definitely benefit the national economies across many macroeconomic perspective or dimension, especially the investment. While financial market is a crucial to economic development and also stability is always desirable, yet exchange rate uncertainty, we say a risk, persists over time, regardless whether the countries are developed or developing. Now, here are some of the graph, the stock price movement and exchange rate movement for Asian 5. So with Malaysia, Singapore, Indonesia, Philippines, Thailand, and OECD countries. So based on the graph here, Asian 5 and OECD members still experience volatile exchange rate movement, or we say more complex as each economy differs markedly in currency regime, trade dependency, and exposure to global financial shocks. So again, when we talk about a stock market, it is an investment avenues that investor may consider. Well, stock market, we can split into two, conventional and Islamic stock markets. And also several questions raised up. Does the stock market perform well enough or remain stable when dealing with fluctuating exchange rate? In what degree the conventional and Islamic stock market react on exchange rate volatility? Does both of these financial markets still remain efficient when dealing with exchange rate risks? And is there any differences between conventional Islamic stock markets when dealing with exchange rate issues? Well, to address these concerns, this study draws a prior literature to compare the conventional and Islamic stock market, particularly regarding the exchange rate and stock price across Asian 5 and OECD countries. Well, to accomplish this, a central research question is formulated. What insight were gained from existing literature on the exchange rate and stock price for Asian 5 and OECD on conventional and Islamic stock markets? While these studies will critically synthesize concern about comparing conventional and Islamic stock market across Asian 5 and the OECD, particularly regarding the exchange rate and stock markets. So it then provides insight into future study direction in a similar scope. So next we move to the comparison between the conventional Islamic stock market. So we can compare these two stock market in terms of the performance, the return, the risk, efficiency, and market integration. Well, a quick background for the Islamic stock market, or we say the Sharia compliant stock. So recently, the Islamic stock market, we say growing global global investment area and then serve as an alternative investment choice for both domestic and foreign investor. While the special characteristic for the Islamic stock market is where the market follow the Sharia law. And next we go one by one. So here we have the performance and risk, the comparison between conventional and Islamic stock market in terms of performance and risk. While the conventional stock market outperform based on the literature, and the conventional stock market outperformed the Islamic stock market. Well, in contrast, we say the Islamic stock market outperformed the conventional stock market and argue that the Islamic stock market in this relatively low risk compared to conventional index, which bear higher systematic risk, and also outperform during the turbulent times and reduce the systematic risk and generate significant diversification benefits. While there is another scholar, they proclaim that there is no significant difference between the conventional Islamic stock market performance. So next we move to the comparison in terms of efficiency and integration. So Islamic stock index were slightly more efficient than their conventional counterparts and exhibit the same level of efficiency during the general downturn. While in long-term diversification benefit may be diminished, though not fully eliminated, due to varying degrees of business and financial risk across securities. And also argue that there will be no diversification benefit for investor from having for both Islamic and conventional index in their portfolios, and also claim that international diversification benefit exceed in both conventional and Islamic stock index, and with Islamic equity providing substantial diversification benefit to conventional equity. And furthermore, we move to how exchange rate volatility influence stock return. So the predictive power of the monetary policy variables volatility appear to better explain the volatility in the Islamic stock market due to in part to the smaller numbers of listed companies in the Islamic stock market than the conventional stock market. Well, second, stock return and exchange rate returns are not independent. Instead, they are dependent. And the volatilities of all monetary policy variables was significantly affecting both Islamic and conventional stock markets. And third, stock return are influenced by the economic performance, and it is reasonable that the change in the future macroeconomic uncertainty may cause the stock return to be volatile. So we have, based on the past literature review, we have several insights. The first, trending of interaction between stock markets and exchange rate volatility. So the comparison between the Islamic and conventional stock market remain limited, especially in the Asian and OECD region, while most of the study focusing only on a specific country. It informs that relative consideration focusing on the comparison between Islamic and conventional stock market solely in terms of performance is needed. And for the recommendation, the futures research investigate the interaction between stock market and exchange rate volatility, which we recommend. And insight two, performance differential between Islamic and conventional stock market. So another consideration concern the Sharia screening criteria used in constructing Sharia compliant stock index. So this screening process excludes a segment of firms, particularly those with higher interest-based leverage ratio, which are often among the riskiest company. While as a result, Islamic stock index may exhibit some under-diversification relative to their conventional counterparts, but this under-diversification can generate additional return premium. It also alters the index risk return profile, while consequently drawing precise conclusion regarding the performance differential between Islamic and conventional stock markets become challenging. So it's advocate that future research consider the differential performance of Islamic and conventional stock markets. Well, insight. Third of the insight, theoretical assumption with dynamic analytical tools. So does the capital assets pricing model, CAPM, remain applicable within the context of conventional Islamic stock markets, or does it require further investigation? Well, here, CAPM assumes a closed economy with no international investment or currency exposure. It operates as a static single period model with time invariant beta and does not explicitly model volatility and focus instead of the expected returns. So this feature render CAPM inapplicable in dynamic time frame, which require analytical tools such as dynamic time varying approach, including the continuous Reflet transform and dynamic common correlated effects model. Furthermore, it is argued that emphasize macro level interaction between the exchange rate volatility and stock market returns rather than micro level concerns with maximizing profit for given level of systematic risk. Insight 4, exchange rate volatility and interaction with stock returns. Okay. So most of the study apply common integration tests in examining the interaction between stock returns and exchange volatility, such as most of the study they apply ARDL model, Granger co-integration test, VAR model, GMM, panel, generalized autoregressive conditional heteroscedasticity model, and so on. So suggest that the generating of the exchange rate volatility variable using the asymmetric gauge model can capture both positive and negative shocks. Such volatility analysis may provide a precise understanding of exchange rate behavior and minimize the uncertainty when examining its interaction with stock market return. While the panel autoregressive distributed lags model and the recent DCCE model, Dynamic Common Correlated Effect model, will be suggested for future study to clarify the interaction between stock return and the exchange rate volatility. So as conclusion, this study draws a prior literature to compare the conventional and Islamic stock market, focusing on exchange rate and stock price across ASEAN 5 and OECD countries. So based on the existing words, 4 major insights again. First, trending the interaction between the stock market and exchange rate volatility. Second, performance differential between Islamic and conventional stock market. Third, theoretical assumption with dynamic analytical tools. And fourth, exchange rate volatility and interaction with stock return. While all of these major insights inform a significant perspective, which is the future direction of conventional Islamic stock markets should be examined carefully, particularly regarding exchange rate and stock price, and also informs academicians, researchers, and practitioners that they may highlight this insight when similar study focus on the stock market. Particularly in the conventional Islamic sectors, exchange rate and stock price in the context of ASEAN 5 or the OECD. Yeah, for sure we have several limitations of the study. First, this study is a review and synthesis of the insight from prior literature and with potential coverage bias based on the outer judgment and then less statistical evidence to validate the insights discussed, while in future study may build on this insight of this study to cross-validate the comparison between conventional and Islamic stock market across ASEAN 5 and the OECD. Again, particularly with respect to exchange rate and stock price. So that's all from my presentation. Thank you.